This is an Uncovered Japan Company research report on Tokyo Energy and Systems, ticker 1945. It is a Japanese power plant engineer whose investment case rests on specialist nuclear work, a growing renewable energy business, and an unusually visible order backlog. This is educational research, not investment advice. Tokyo Energy and Systems is small beside Japan's large electrical contractors, but its end FY26 backlog reached a record 144.9 billion yen. Nuclear represented about a quarter of sales, while the shares were valued at 1.02 times book value in the report. Those figures make the company both a policy-sensitive energy story and an execution story. The company works across thermal and nuclear power plants, substations, transmission equipment, and maintenance. What makes the model more interesting than a standard contractor is its green energy division. Alongside constructing projects, it owns and operates selected biomass, small hydro, and solar assets. That can add electricity sales and recurring operations and maintenance revenue to construction margins. Energy was 56% of FY26 sales and remains the ballast of the group. Nuclear was 24.1% and grew 32.6%, helped by work connected to Kashiwazaki Kariwa and Fukushima. Green energy contributed 12.6%. The intended strategic direction is clear: reduce dependence on one utility customer, while increasing exposure to general industry and renewable markets. The recent earnings improvement reflects more selective, profitability-first bidding. But the report also stresses the limitation. At roughly a 5.7% operating margin in FY26, Tokyo Energy and Systems still trails the large listed peers. The thesis is not that scale suddenly disappears as a disadvantage. It is that specialist work and disciplined bidding can improve the economics over time. The core competitive advantage is not broad scale. It is a narrow, deep set of references and qualifications in nuclear and power plant work, reinforced by decades of TEPCO heritage. Safety-sensitive projects are reference-gated, so a new entrant cannot simply bid its way in. The counterweight is concentration. The same historical relationship that created the moat also created customer dependence. For an order-based engineer, backlog matters because it largely dictates the next 2 to 3 years of revenue. The end FY26 backlog was a record 144.9 billion yen, up 19.4% year-on-year. That visibility is a strength, but not a guarantee. The investment case still depends on replenishing orders, converting projects profitably, and avoiding working capital pressure. Reported profit alone is not enough for a project contractor. Cash flow can move substantially with billing, receivables, procurement, and the timing of large projects. The report therefore treats cash conversion as a key test of the thesis. A growing order book is useful only if it turns into cash without unexpected cost overruns or a buildup in working capital. Management's goal is to reshape the mix away from a utility-heavy model toward a more balanced combination of utility, general industry, and renewable work. Nuclear restarts, grid demand, and the energy transition are supportive themes, but they do not make this a simple macro trade. Project execution, customer diversification, and the durability of margins remain the operational tests. At the report's reference point, the shares traded at 1.02 times book value, below a peer median near 1.8 times. But the report is deliberately cautious. Lower return on equity partly explains that discount. The question is whether margin improvement and an 8% ROE target become durable enough to justify a narrower discount, not whether a low multiple automatically means cheap. The report's scenario work is an author estimate under stated assumptions, not a target price or recommendation. Its base case was broadly reflected in the reference share price. The remaining asymmetry depends on whether backlog converts into profitable growth, whether margins and ROE improve, and whether nuclear work proceeds on the expected timetable. Tokyo Energy and Systems combines a real nuclear engineering niche, owned renewable assets, and a record backlog. It also faces customer concentration, smaller scale than peers, and policy-sensitive project timing. The report's conclusion is balanced. The opportunity is visible, but the next return depends on execution. Continue with the free 5-part deep dive for the supporting evidence and risks. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security.